Hey, what's up, everybody? Welcome to episode number 40 here on season 1. Today we are diving into top 3 ETFs for stash retire or on stash retire. So, the reason why I wanted to talk, still, if you guys don't know what stash retire is, I believe that I've already made a video. Go ahead and check that out right there. But I'll give you a little bit of a rundown on that. Stash retire is basically stash invest, but instead of it being just a regular investment account, it's a Roth IRA. And if you want to know why a Roth IRA is so important, I'll go ahead and link that up right there also. But anyway, so Stash Retire is the Roth IRA version of Stash Invest. And so because it's the Roth IRA, you're looking at investing up until the age of probably 59 and a half, or even longer, probably until age 65. So it's a retirement account is what more of what you're setting up. So if you're young, in your 20s, you're probably looking for like a 40-year investment strategy and not like 5 years to make a quick buck. So here are my top 3 ETFs that I would choose for stash retire, and that I actually do choose for stash retire. So this is my opinion. You guys can take it or leave it. Use it if you want, or don't use it. If I make you millions, just let me know. And if I don't make you millions, I don't want to know about it, but you can let me know also. Anyway, so the first top pick I would invest a lot of my money into is called this stock called, or on Stash is called Delicious Dividends. It's actually, the stock symbol is SCHD. It's a Charles Schwab high yield dividend investment. So they buy like Coca-Cola, Johnson & Johnson. I think Apple's like another majority stock that they hold. Anyways, it's an ETF, and this ETF gets paid 2.8% yield. So say you've invested whatever $100 over the course of a year, you would make $3 back just off of dividends. That's not including the climb of the ETF. So the ups and downs of the ETF. And as far as for right now, it's been trending up. Its inception was, I think, in 2011. But since 2012, so for the past 5 years, it went from $27 to $45. And it looks like it's still going to continue to climb. Obviously, there will always be dips in ETFs. But over the course of the long run, usually you'll see about about a 5 to 8% return off of those. So if they can manage to keep it up at like an 8%, plus the 2.85% that you're going to get back off of dividends, you're looking at about like 10% a year, plus compounding that over the course of like 10 years, and now you're talking big money. All right. Anyways, the next stock is a gold stock that I would suggest. It's called All That Glitters on Stash Retire. However, the stock symbol is GLTR. You basically on there are investing into gold, silver, platinum, and palladium. And this, okay, so I'm just gonna be honest with you guys. Since inception, it's went down 3%. It was they launched it in 2010, which the crash was in 2008, and so the stock market has been rising since about 2009-ish, which means that when the stock market rises, gold starts going that way. However, the reason why I say that you should invest into this one is because it secures your money against inflation. For those of you guys who don't know, gold and silver and precious metals hedge against inflation. So the 3% that we distribute money here in America, it hedges against that, so it'll secure your money against that. And then also it trends opposite to the stock market. So obviously we're going to have a downtrend here probably within the next couple years to the next 10 years. So it's definitely a good idea to start investing your money into gold and silver, because that'll trend against the stock market. So when the stock market starts going like this, we're looking at the gold and precious metals start to trend up like this. So it's definitely going to hedge against the stock market. And then the last and final stock I think that is very important for you guys is the blue chips. Blue chips are always great for especially long-term investing. Obviously, if you want to make quick money, you're looking at penny stocks and those kind of ETFs. But for long-term investing, specifically Roth IRA, you're looking at blue chip stocks. And the symbol on this is MGC. This is going to produce a 1.94 dividend yield rate over the course of a year, which is almost 2%, which is actually pretty good. Obviously, if it could be around 5%, it would be a lot better, but 2% is not bad. And then it's been up 8% since inception in 2007. And if you guys know anything, 2008 was the crash, and so it's still, even in 2008, it was still trending up. So blue chip stocks are always a great way to invest long term. And then also within the stock, it's a very, very low risk ETF. So a majority of stocks on Stash Retire are going to be like the high medium range. This one is like low medium range. So it's a great investment for the long-term strategy on your Roth IRA. Here's a little quick tip. So what I would do with this is I would do about 25% into each of these, and then that rest, so then that 70, so that would be 75% that you would have to be invested into these top 3 stocks or ETFs, and then I would take the rest of that 25% and pick, I don't know, like 3 of your favorite ones and just split it up into there, or 4 of your favorite ones, or 5. If you do 5, it's 5% for each, and you could just do 5 of those, and then just do dollar cost averaging on all these stocks, and over the course of like the next 40 years, I hope that you start to make a lot of money. Anyways, that I feel like that wraps it up. I'll just go ahead and review real quick. Delicious dividends, all that glitters, and blue chip stocks are the top 3 ETFs that I would invest in over for my Roth IRA here on Stash Retire. And let's go ahead and dive into the question of the day. The question of the day is, why do some people understand math easily while others don't? I think that has a lot to do with probably our strengths and weaknesses, maybe a little bit of biology. But what I think it is what I think it has to do with biology, and I think it has to do with how we were raised. I think that people who typically aren't so good at math is because their parents never supported them early on in doing math, and maybe they also just don't think like that. I know that some of my friends are very, very good at English, and because I'm terrible at English, which you can check out why I struggled in school right up there as well. What I think is that some people are just very, very good at math, and some people are very, very good at English, and I think that we're supposed to learn how to bring our strengths and weaknesses together to form a better business, better church, better partnership, whatever it is, better friendship. It's supposed to complement each other. And so if we have 5 people that are everybody in the world was just really good at math, then we would all be walking around like mathematicians, but really we couldn't write a paper to save our life. So anyways, I hope that answers that question. If you guys have an answer to the question, I'd love to hear it down below. If you guys have any questions for future episodes, go ahead and let me know down below, and I'll tackle them on the next episode. And until next time, don't forget to subscribe up here. Check out what my Robinhood trading strategy is, and don't forget to check out this other cool video right in this area right here. And until next time, thank you for watching. I really appreciate it.